I think if you look at actually what's happened over the past 2 or 3 months, we actually haven't seen the stock market go anywhere. It's been range trading, so we've seen a bit of weakness over the past few weeks, but actually it's been pretty much range bound. So I think markets are certainly skewed towards a Biden victory. If you look at the 10-year yield, that's obviously risen a bit, but it hasn't broken higher either. So I think people are still a little bit edgy, a little bit nervous about what's going to happen in the next 24, 48, and who knows, it could be a lot longer hours. And therefore, they're just holding their horses for a bit before really trying to figure out what policy is going to happen post the election.
So are you anticipating a volatile 24 to 48 hours? And if you're in the markets, what do you do over the next 24 to 48 hours?
Well, I mean, it really depends, obviously, on what your current positioning is. We do expect some volatility to come through, obviously, as we see swings in polls, etc., and the voting counts taking place. So that certainly seems the most easiest prediction. Whether it's volatility on the upside or volatility on the downside or both, obviously that's the key question. For clients, if you're positioned, most of our clients are significantly overweight cash still. So, we would be saying to them, OK, let's take advantage of any pullbacks that we see to increase allocation to risk assets, equities or credit. But also you can then also look at the volatility spikes in equity markets as an opportunity to sell volatility as well. So, but, if we're looking 6 to 12 months forward, we do believe we're going to see another fiscal stimulus. We think the Fed's going to be comfortable funding that, and that's good for the economy. How we get there, obviously, we'll figure out in the next few days.
Let's explore that a little bit, Steve. It's Hadley out in Abu Dhabi. I mean, whether he wins or whether he loses, President Trump's got a couple more months left, potentially, and even lame ducks can do a bit of damage. What does it look like, do you think, in the short term, whether or not we even see a contested election? Because you've got Europe shutting down again, the United States potentially having to shut down in its major cities. What does that look like for you?
Yeah, certainly. I mean, if we're looking at the growth outlook, you've just obviously talked through some pretty strong numbers in the US, but we're already seeing numbers in Europe, economic numbers being pared back for Q4, obviously, with the tightening there. If we did see a Biden victory, then unless we see coronavirus coming under control, he's probably going to do something similar. So it's going to be an uneven path for the economy. Obviously, we've already seen uneven in terms of some sectors doing incredibly well and some doing very, very poorly. But I think even at the macro level, it's going to be pretty uneven. As long as people think that the end point is still that we come out of this without a massive, credit spiral or credit default spiral, then I think markets will be able to look through it. But if that assumption is challenged, then it could get quite messy.